What's up, guys? In today's video, we're going to talk about, can people who are engaged in extreme sports get life insurance? And if they can get it, is there any reasons that the insurance company will not pay out the claim if they did happen to die from those activities? So let's just get right into the video. Okay, so basically in this video, we're gonna go over what is considered an extreme sport, because maybe you are engaged in extreme sports, maybe you're not. We're also gonna talk about the different options that you have available to you. We're also gonna talk about if they will deny a claim or not deny a claim. And I'll actually give you an example as well, so you'll understand exactly if you can get it or not. Okay, so before we talk about any of that stuff, we need to talk about what is considered extreme sports in the eyes of an insurance company. So I'm gonna read a quick list. This is not exhaustive. Obviously, there might be a few other ones, but I think this encompasses most of the activities that you might be engaged in. So the first one would be practicing aviation other than a passenger. So if you're flying an airplane, that's one. Scuba diving, parachuting, heli-skiing, winter sports in avalanche risk areas. So that could be backcountry skiing, that could be ice climbing, mountaineering, climbing, rock climbing, ice climbing again, hang gliding, paragliding, and car and motorcycle racing. That is a pretty good chunk of activities, and you can kind of pick out one of them if you're engaged in them or not. So the insurance company treats those as extreme sports. You might not think they're extreme sports, but the insurance company does consider them extreme sports. Okay, so let's talk about the application process now. So there's kind of two different ways that you can go about getting insurance as an individual who is engaged in any of those extreme sports that I just listed, okay? I will break this up into two types of insurance, and it still could be term insurance or permanent insurance. That doesn't matter, okay? The first I'm gonna call traditional insurance. And this is where you essentially will go to a standard insurance company. So, Equitable Life, RBC, Avari, Manulife, etc. And you would apply directly from what's known as fully underwritten traditional life insurance company. Now, in that questionnaire, they'll have a question that will say, are you engaged in any of these extreme sports, yada, yada, yada. And if you are, which ones are you involved in? Now, as soon as you answer that, they're gonna give you another subset of questions based upon which activities you're involved in. So this is where it gets a little bit tricky, because most people that are engaged in some of these sports, they're not necessarily just engaged in one. So for example, maybe they're doing mountaineering, but with that also comes ice climbing, and they also do backcountry skiing, and maybe they do a little bit of paragliding and canoeing and whitewater rafting. The difficulty is, as soon as these start to add up, the insurance company is gonna be looking at you like you're riskier and riskier and riskier. And the more that you answer all these different questionnaires, well, they'll ask you, how high do you go? Do you go with a partner? How long have you been doing it? Do you do it roped or unroped? How often do you do it? What's your experience level, etc., etc. And they're gonna take that and base a risk category to you. So usually at the end of this process, when you apply with this traditional company, two things are gonna happen. The first thing that could happen is what's known as a rating. So they'll come back and they'll say, listen, we looked at your application, we quoted you $35 a month, but based upon everything that you provided to us, we're actually gonna rate you, and the price is gonna be, let's say, $100 to $150 a month. That's the first option. The second option is they could give you an exclusion. So an exclusion is, well, listen, we'll give it to you at $35 a month. However, if you do die from any of these activities, then we're not gonna cover the claim, we're not gonna pay it out. So, I mean, in my opinion, if I'm gonna pass away young, it's probably gonna be from some type of extreme sport and not from driving my car down the road. So to have an exclusion doesn't make any sense. The second option that you can get is something known as simplified life insurance, okay? Now, simplified life insurance is a type of product, and again, it can be term or permanent, but it's where the insurance company, and there's a small subset of them that are catering towards different niches, they've looked at the questionnaires and they've looked at the different risk categories of clients. They said, well, instead of having this huge questionnaire and doing medical underwriting, doing all these other things, why don't we shorten down the list of questions, and then we'll lump different people into these categories, okay? So we'll ask less questions and we'll lump people into these different risk categories, and then we'll automatically apply the rating, because we know if they answer yes to one of these questions, boop, that's the one risk category they go into. If they answer no to all of them, you get better rates. Okay, so simplified life insurance is a little bit different in that regard. Now, there's a few different companies out there that work really well in this market. CPP is one of them. Industrial Alliance is another one. Assumption also has good products. And essentially, in that list of questions, the extreme sports question is much farther down into the end where the rates are actually quite preferential. So in some cases, depending on how many of those activities that you're engaged in, and again, depending on the risk category you'd fall into, it's much cheaper to go with a simplified issue product. Now, maybe I'll give you a quick example and you'll start to understand kind of the price difference between these two different products. And this example is myself, okay? So I'm engaged in quite a few different, what I guess the insurance company would call extreme sports, and I wanted to get life insurance on myself. I went to a traditional company and I asked, can I get this life insurance? They quoted me, I think it was like $35 a month for about $500,000 of coverage. But then when I went through the questionnaire, I do backcountry skiing, I do ice climbing, I do mountaineering, I do rock climbing, and they started to look at all these different things. When I actually filled out the questionnaire and gave it back to them, my price went from $30 a month to a rating of, I think it was around $280 a month. So a huge price increase. When I went to a simplified product, that price went to $80 a month. Not as good as the $35 a month, that's for sure. $80 a month is much better than $280 a month. In my case, it was definitely cheaper to go the simplified issue route. Now, depending on how many activities you do, it might be cheaper to go the route of the traditional insurance, or maybe you could put an exclusion and then it would be the same price. It would be a standard rating if all other things were equal. By the way, if you're looking at getting quotes for either traditional life insurance or life insurance at a simplified issue that will cover you for those sports, visit affinitylife.ca and I'll put that link in the description. I built out a section just for extreme sports, and it's just a simple question at the beginning. Are you engaged in extreme sports? Just hit yes, and you'll go to that section with these simplified issue products. You can view quotes online and apply 100% online as well. So I'll put that in the description below. So let's talk about, will the insurance company deny my claim? That's a very common concern because we've seen this in the past. We've heard about stories. We've read newspaper articles. There's a lot of misconception around this. And I made a video why insurance companies can deny claims, and I'll put it right there, but we're gonna talk about it real quick. There's really only two reasons why an insurance company can deny a claim. The first one is suicide within the first 2 years. It's pretty standard. So within the first 2 years, they won't cover it. After 2 years, they do cover it. The second one is intentional fraud and lying on your application. So on the application, if they ask, are you engaged in these sports? And you answer no, and they find out that actually you are engaged in these sports, that's fraud. If they go back and they look that, 5-10 years ago when you did the application, you were engaged in those sports and they have evidence of it, they have proof of it, they can prove that that's fraud, and that will make it essentially an invalid life insurance policy, and they don't have to pay it, okay? They might still pay it just to save some face, depending on how much it is, but don't bet on that in the slightest. Do not bet on that. They can absolutely deny it, and they probably will. So if you're engaged in these sports and you want to get life insurance, what should you do? Well, definitely have a conversation with your broker or the website like I just mentioned. I would recommend starting with simplified issue, having a conversation, seeing how many of those sports that you're engaged in, and maybe just sticking with the simplified issue, or maybe getting that locked in and then trying to apply for traditional life insurance and see if you get it. Maybe you get it and it's a cheaper rate and you can cancel this other one and go on your way. But whatever you do, don't lie on your application. It's not a good thing to do. They can deny your claim. Don't try and get a cheaper rate by not putting information in the application or lying blatantly on the application. That's not what you want to do. So I hope this video helped you guys. If you guys have any questions, please feel free to reach out. And if you guys are enjoying this content, all I ask is to give it a thumbs up, and I'll see you guys in the next one.